Hello, are you there? All right, in today's conversation, I want to talk to you about how to minimize crypto taxes. I will share with you the top 10 cryptocurrency tax reduction moves that pay off big time. Don't go anywhere. You're going to love today's conversation, I guarantee it. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee, or tea, or vodka, and let's roll. In today's conversation, I will share with you how to minimize crypto taxes. It's very important to understand that cryptocurrency is one of the hottest topics in the financial news right now. As a matter of fact, people are becoming millionaires or even billionaires for those companies that went public, right? And it's very important to understand that when you have income, you got to have income taxes, right? That's just the way it is. So what are crypto taxes? Cryptocurrency is considered property for federal income tax purposes. This is very important to remember. So the IRS looks at cryptocurrency as property. And for the typical investor, the IRS treats it as a capital asset. As a result, crypto taxes are not different than the taxes you pay on any other gain realized on the sale or exchange of a capital asset. So let me give you an example. So when you buy a capital asset, whether it is a stock, a bond, house, widget, Dogecoin, Bitcoin, or other investment, you establish a basis equal to your cost to acquire it, right? So you have an acquisition cost or basis. So when you sell the asset, you compare your sales proceeds to the basis to determine whether you have a capital loss or a capital gain. And if your proceeds exceed your basis, you have a capital gain. If the reverse happens, you have a capital loss. Very simple, right? You also need to consider the time period for which you held the asset. This is very important. So depending on how long you hold your cryptocurrency, your gains or losses will be considered short-term or long-term. So this distinction will also play a big role in how much you have to pay in crypto taxes. Very important. So in accounting or taxation, when you talk about short-term capital gains and losses, you are actually talking about a time period that is lower than 1 year. So when you buy and sell an asset within a 365-day period, you'll recognize a short-term capital gain or loss. Short-term gains are subject to the same tax rates you pay on ordinary income, such as wages, salaries, commissions, and other earned income. And the IRS has 7 tax brackets for ordinary income, ranging from 10% to 37% in 2021. That's for short-term capital gains and losses. When you have a long-term capital gains and losses, it means that if you have bought the asset and sold it after a year. So short-term, less than 1 year. Long-term capital gain, more than 1 year. So this is basically what you need to think about. So currently there are 3 tax rates for long-term capital gains. You have 0%, 15%, and 20%. So the rate you pay depends on your income. So now let me give you the top 10 crypto tax reduction tips. Okay. Number 1, you want to hold. You want to hold until your short-term gains turn into long-term gains. This is important because you have seen earlier, as I've told you, that the rates for long-term capital gains are lower than the rates for short-term capital gains. So this is really important. So different capital gains rates will apply depending on how long you hold your crypto. So if you want to lower your tax bill, guess what? You want to hold your capital asset, your cryptocurrency, long enough to turn your short-term gains into long-term gains. It may not be an easy task, but if you have the patience and fortitude to keep your crypto for at least a year before selling, then you will likely pay a reduced tax rate on any capital gain. And this is worth it. I know when you keep looking on the crypto charts every day, this can give you a heart attack. So don't look at it. You just want to buy and just go sleep and wake up after 1 year and then sell if that's what you want to do. So first strategy, you want to hold. Second strategy, you want to offset. So you want to offset capital gains with capital losses. Okay, this is a great strategy. This works by subtracting losses on crypto assets that you sold during the year from taxable gains on cryptocurrencies or other investments that have appreciated in value. But I want you to be very careful though. You face limits when using this strategy. So when you recognize investment losses, you first must offset losses on the same type. For example, short-term losses first reduce your short-term gains, while long-term losses lower your long-term gains. So after that, if you have net losses of either type, you can use them to offset the other kind of capital gain. Let me give you an example. If you have excess short-term losses, you can apply them against any remaining long-term capital gain. Okay, and if you still have a net capital loss available, you can use it to lower your ordinary income. However, when pursuing this strategy, you can only use up to $3,000 of capital loss to lower your ordinary income in any given year. This is a threshold the IRS has put in place, so this is what it is. And the remaining balance rolls forward to the following year to offset future gains or lower your ordinary income by up to $3,000. That's what we call the carry forwards and the carry backs, okay? But in this case, we're talking about the carry forwards. So first strategy to minimize crypto taxes, you want to hold. Second strategy, you want to offset. Third strategy, you want to time well. What does that mean? You want to sell in a low income year. Basically, right now, crypto is very volatile. It's a volatile asset. But if you have the heart for it, if your risk profile is kind of cool for that kind of asset, go for it. But you want to sell in a low income year. In other words, when waiting for your crypto gains to convert for short to long term, you might also consider another time element, choosing to sell in a low income year. And this can help with taxes on both long term and short term gains. Let me give you an example. If you have short term gains, which are taxed as ordinary income, you will not have as much other income added on that pushes you into a higher tax bracket. For example, if you sell short-term assets when you retire or are no longer collecting wages, your tax brackets could be based entirely on the income from your short-term gains. And if you have long-term capital gains, a lower overall income for the year can mean a lower tax rate for those gains too. Do you follow me? And that's because the long-term capital gains rate applies to you. Either this is either 0%, 15%, or 20%. That rate is based on your taxable income. So what I'm trying to say here is if you have less taxable income, you are more likely to have a lower, longer term capital gains tax rate. Also, if you choose to retire early and have accumulated enough cash to fund your living expenses until you can withdraw funds from your retirement account, you might have little to no income during the year. So if this is the case, this is a perfect time to lock in long-term capital gains and possibly pay a 0% tax rate. Strategy number 4, you want to reduce income. You want to reduce your taxable income. If your goal is to reduce your crypto taxes, you also want to reduce your income. So you want to basically think about, so it means you have to go through the tax code for tax deductions and credits that can bring your taxable income down. This has no direct correlation with crypto, but it works for all kinds of assets, especially capital assets, and crypto is one according to the IRS. So the whole idea here is that, for example, you can take care of expensive medical procedures. You can contribute to a traditional IRA or 401k plan. You can put money in a HSA, a health savings account, or even donate cash or property to charity. Okay, there are plenty of other tax deductions and credits that you may qualify for too. And you might even want to ask an EA or a CPA or a tax professional in general to help you uncover some other tax breaks. The bottom line here is that you want to reduce income. Strategy number 5, you want to invest in an IRA. This is important. You want to invest in a crypto in a self-directed individual retirement account. And it's kind of cool. It works in a very simple way. All you have to do, invest in a tax-deferred or tax-free self-directed individual retirement account. That way you either pay taxes later when you conceivably have a lower taxable income in retirement, or upfront when you contribute to your Roth SD IRA because you have expectations of higher taxes in retirement. It's totally up to you. It depends on your situation, okay? And what I want to see here is you can see how a self-directed IRA differs from a regular IRA. courtesy of our friends at NerdWallet. Great explanation here. And what you want to see here is that you can invest the funds in assets such as real estate, non-traded businesses, even a horse farm. We love that. You need a trustee or custodian that specializes in less typical investments, and you might get higher returns and portfolio diversification, but there are big risks. One thing I want to say here is that if you need to invest in an IRA, make sure that the strategy fits your financial situation. You want to find the right broker. Very important. At the end of the day, reputation is very important in the financial services industry. Try to have the proper tracking software. How do you track your investments? First of all, where do you have them? Do you have them with a single brokerage, or do you have them actually spread over several brokerages? What is your tracking strategy? You also want to think about the possibility of conversion into another long-term investment vehicle, right? It's all about keeping that option open. Of course, depending on your risk profile. Are you risk averse or a risk taker? What is your age? Obviously, you can't play the same game at 60 that the game you're playing at 40 or the game you're playing at 20. You can't play at 60, right? And at the end of the day, it's all about getting the right resources. I've said this before, I'll say it again. It's very important to speak to a tax accountant or lawyer before doing it. You can talk to an EA, you can talk to a tax lawyer, you can talk to a CPA, whatever it is. If you have no knack for tax issues, it's always important to get the right resources. Okay? I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Sweaty Kiwi Show. We are still having a conversation about how to reduce your crypto taxes. And strategy number 6, you want to give to relatives. Yeah, you want to give the assets to a family member. So depending on your goals for using your wealth, you might consider another way of lowering your crypto tax bill. Gifting your cryptocurrency to family members. This works fantastically because the IRS allows you to gift up to $15,000 per year per person without tax consequences. Think about that. $15,000 per year per person without any penalties. So while the basis in the cryptocurrency transfers to the new owner, the recipient might earn a low enough income where they won't pay taxes on the appreciated property when sold. Or at the very least, they will be paying, based on our research and our calculation, they'll be paying less in taxes than you might have to pay if you were to sell the cryptocurrency yourself. Okay, so this is something you need to think about. And we have covered a lot of videos on estate planning, wealth transfer, wealth management. You might want to go into our video catalog to learn more about that. And strategy number 7 is kind of similar to number 6. You want to donate to charity. So you want to donate your appreciated cryptocurrency to charity. Now, you might be saying, well, I don't want to donate. I need the cash. I need the cash. I can't do it right now. Cash is tight. But if you are in a situation where you can donate part of your appreciated crypto to charity, that's kind of cool. Okay, you might basically, not only will this result in a no capital gains tax, it can also trigger a significant tax deduction you can claim on your tax return. So basically, when you donate an asset, you can claim the appreciated fair market value at the time of donation as a deduction against your taxable income. Let me explain further. If you own 50,000 or 75,000 worth of Bitcoin and choose to donate it to a charity you regularly support, you may be able to write this off as a charitable deduction on your return. Furthermore, if the charitable organization qualifies as a tax-exempt 501c3 charity, it won't need to pay capital gains taxes when it sells the donated cryptocurrency later. So this is really a cool situation because you have a win-win situation. The charity doesn't pay any taxes, and you, based on the deduction that you get, the charitable deduction you get, you're paying as a low tax as possible. Your tax bill is just like crazily low. Strategy number 8, folks. Number 8. You want to relocate. This might sound crazy, but you will be surprised that there are basically, if you move to a state with no income tax, this is a great strategy. this is really a great strategy. And I'm giving you a few states that have no income tax or a very, very low income tax. As a matter of fact, you can even move to Puerto Rico. Right now, if you have a crypto tax, if you have a crypto gains and you have become a millionaire through crypto, you can move to Puerto Rico and not pay any taxes at all. I want also give you a few. So there we have 9 states with no income tax. We have Alaska. So there is no state income tax. Okay. And one thing I want to say here is that localities can levy sales taxes, which can reach 7.5%. And higher rates are found in locations that lack a property tax. But according to the Tax Foundation, the statewide average is only 1.76%. And then we have Florida. Florida is also cool. There is no state income taxes. The sales tax, you have 6%. Okay. And we have Nevada. If you love, this is a beautiful state. There's no income taxes. There is a 6.85% state levy. And localities can add as much as 1.53%. And the average combined rate is 8.23%. And we have New Hampshire. This is another beautiful state. And New Hampshire doesn't tax earned income, but currently there is a 5% tax on dividends and interest in excess of $2,400 for individuals and $4,800 for joint filers. Okay. And we have also South Dakota. And this is a very tax-friendly state. There are no income taxes in terms of obviously they charge a sales tax of 4.5%, but there is no state income taxes. Then we also have Tennessee. I want to say hi to my folks in Tennessee. So here, there is no state income taxes, and there is a 7% state levy you need to pay attention to. There's also an additional state tax of 2.75% on sales of single items that applies to the portion of the sales price from $1,600 to $3,200. We also have Texas, beautiful state, the Lone Star, and we have no state income taxes, but you do have a 6.25 state levy, and localities can add up to 2% with an average combined rate of 8.19%. We have Washington State, another great state. We have a 6.5% state levy, and the localities can add up to 4% to that. We have Wyoming. There is actually no state income taxes, but the localities, actually there's a 4% state levy, and localities can add up to 2% to that. Okay, so this is basically a few states that are pretty tax friendly if you're interested in moving there, including, of course, Puerto Rico. Number 9, if your goal is to minimize your crypto taxes, you want to bequeath it in your estate. Obviously, I was talking to you earlier about estate planning. So this is something you just put everything in your estate. In other words, you just want to wait. You don't want to worry about it. When you pass away, the investment will actually receive a step up, in other words, an increase in basis to its fair market value at the time of your death. That way, your heirs will not need to pay taxes based on your original basis when they sell the cryptocurrency they inherited. However, because cryptocurrencies carry significant volatility, depending on the virtual currencies you own, they could shoot up or down at a moment's notice. Okay, and if this happens and the virtual currency go to the moon, at least your heirs' tax bill won't be as large since they received the tokens with a stepped up basis. So this is a great strategy also. And number 10, if you want to reduce your cryptocurrency taxes, you want to strategize. This is very important. I want you to look right now on the screen. You can see here the long-term capital gains rate and the taxable income, whether you're filing as a single or married filing jointly. I want you to study very, very, very clearly all the tax brackets. What I'm trying to say here is that you want to leverage lower brackets. So you can sell appreciated digital currency if someone expects to pay higher levies in the future, and some investors may qualify for a 0% tax rate. Okay, so do you plan on getting married a year from now or 2 years from now? Do you plan on having a lower income 1 year from now or 2 years from now? Those are things you need to think about. And we've said this before, the best way to do this is to talk to an expert. If you have no expertise in taxes yourself, or you just want to outsource the whole thing, talk to a CPA, talk to an EA. You want to talk to a tax accountant, you want to talk to a tax specialist, a tax lawyer. Okay, you want to strategize. And by strategy, I mean you need to pay attention to your financial situation, your tax brackets, and your future income sources. So you have to think about the present, the past, the present, and the future. So this is really important if your goal is to reduce your tax, your crypto tax in the long run. All right, folks, this is it for today's conversation. I was actually talking to you about how to minimize your crypto taxes. I gave you 10 cryptocurrency tax reduction moves that pay off big time. Number 1, you want to hold. Number 2, you want to offset. Number 3, you want to time well. Number 4, you want to reduce income. Number 5, you want to invest in an IRA. Number 6, you want to give to relatives. Number 7, you want to donate to charity. Number 8, you want to relocate to a tax-friendlier state. Number 9, you want to bequeath it all. And number 10, you want to strategize. Thank you so much for your attention, folks. I will see you next time, but until then, remember, stay marvelous.